Hey everyone, it's Kelsey Majstorovic. So I have a quick announcement. Well, it may not be quick, but I'm going to try to get to it as quickly as I can. So yesterday was Monday, June 13th, and yesterday was a crazy day. Yesterday the market went absolutely berserk. I'm sure if you have any sort of investments or pay attention or have eyeballs and ears, you probably found that out. And it also was a really bad day for mortgages. So rates went really high in a really short amount of time, and actually several times throughout the day. So it was pure chaos. So I kind of wanted to break down a little bit what that means and kind of how we got here. I don't know that it'll resonate with everybody, but I do think it will shed some light, especially with people who this is kind of their first go round, or they're new to the market, or maybe they're new to the United States and they want to understand, what does all this stuff mean? I'll do my best to explain as quickly as possible in layman's terms. So basically, inflation has been at the highest level it's been at in about 40 years, right? So our government wants to try to help with that. That is the intention, at least, right? So the Fed funds rate is basically what drives and helps to influence the inflation or fight it, right? That's the goal. So Fed funds rate, everyone always likes to ask, it's basically the rate that banks use to lend to each other. So it's not, hey, I'm going to raise the Fed funds rate and oh, the mortgage rate immediately goes up with it. That is definitely an effect of that, but it's not the same, right? So the Fed meets about every 6 weeks, right, give or take, and they will relay what they are going to do with the Fed funds rate. So just for perspective, in 2020, obviously we know what happened. COVID-19, right? Shut down pretty much the world. Everything was going somewhere in a handbasket, right? And so our country said, okay, well, we're going to have our rates at 0%. Fed funds was like, we'll be at basically 0%. That way we can stimulate the economy. Rates will be really low with mortgage to incentivize buying, to incentivize purchasing, and keep our economy going. So obviously that was really awesome, but we knew that at some point it wasn't going to be that way forever, right? And so now we're kind of hitting we're not that way forever. Just really drastic as of yesterday. So anyway, back to my point. The Fed funds rate we knew was going to continue to go up this year, and in doing so, it was going to influence investors. Investors are really the ones in the marketplace that are impacting these mortgage rates by their sentiment. How do they feel about the market? Where do they feel like everything's going? And usually if it's a nervous, bad feeling, that negatively impacts interest rates on the mortgage side. So that's really what happened. Panic set in. Everything went berserk yesterday. Friday, there was a report that came out that said, hey, inflation is basically way worse than what we expect it to be. I know some of you were sitting there thinking, duh. But to have it put out there like that, it just caused a frenzy. So that is basically what happened yesterday, June 13th. Again, what is the goal of the Fed funds rate raising these things? It's basically to drive down the demand, right? Soften some of that demand, which will hopefully soften the inflation number. So that is the goal. Again, does it work? Does it always get there? I will leave that up. I'm not here to get into politics or anything else. I'm just explaining why they do what they do. So, and obviously it makes sense. The lower the rates, everybody's out there, right? Everyone's trying to buy, move things around, and vice versa. When things go up, people tend to kind of sit back and soften up a little bit. So that is what's going on. Some positive takeaways. I know it's really hard to find the positive right now, myself included sometimes, right? But I do think there's two positive takeaways. Number one, buying will still be out there. People still have to move, right? They can't control their jobs or their family situations all the time. So unfortunately and fortunately, that means people will continue to move, continue to buy. There will still be some sort of market. It's just not going to be anything like we've seen over the last 2 years where people were just buying to buy, right? Rates are really low. They wanted to take advantage of those things, as they should have, right? So we're not going to see a lot of that anymore, but people still do have to move. So buying will still be there, just not at the crazy levels that we saw. The second thing I wanted to point out, especially to my buyers and to all buyers out there, is that technically, if there's not that many offers, right? Like you used to be one of 30 people arguing over this house and the seller was like, I'm going to stay strong here. I'm going to go in a bidding war and go up. That should soften quite a bit, right? Because there's not as many people that are out there fighting for these homes. And so most sellers are like, okay, well, I have to do something to try to get somebody in here, whether it's to rent or to buy this home. So the good news is that should actually help you some. So I hope that it does. I know a lot of you have been really over this this multiple offer situation market and searching and searching and searching. So I hope that that at least brings some sort of solace and does help in the meantime. Please get with your lender. If you have not talked to your mortgage loan officer, I know that all of us are trying to reach out to you guys as quickly as possible, and there's a lot of y'all, but please reach out to your mortgage loan officer, talk about rates, talk about where your file is, how that impacts your monthly payment, and if you need to reshift your game plan, right? Life happens, things happen. what do we do with the information, and how do we make adjustments, right? So that's what we're here to do. If you have any questions, please feel free to call me or my team. We'd be happy to help you, walk you through it, be fully transparent. That's pretty much the only way to be right now. But if you have any questions, please let us know. The Fed does meet again tomorrow. So tomorrow's Wednesday, so once they meet, they should have an announcement on if they're going to raise the Fed funds rate. If they do, please know that that's probably going to be trickling down to us, and then our rates will continue to go up as well. We hope not, but that is a harsh reality that has to be put out there. So hopefully we hold steady. Maybe they don't raise anything, I don't know. But if they do, please know that that is probably likely for more room for lenders to reprice. So again, thank you guys so much for watching. I hope you all have a great rest of your day. Sorry to be the bearer of bad news, but hopefully there's some positive news in there as well. So if you have any questions, please feel free to reach out to us. Thanks, guys.